Ladies and gentlemen, welcome to the Contrarian Investor Podcast. I'm Tom Wallace, and today I'm truly privileged to be speaking with the senior editor of the free newsletter Survive and Prosper and the author of the newly released book, The Demographic Cliff, Mr. Harry Dent. Harry, thank you so much for coming on the show today.
Sure.
Harry, the Australian property market has experienced dramatic growth over the past decade. Do you think this trend will come to an end soon, and where do you see prices heading?
Yeah, I think it will. We've already seen one bubble after the next burst in real estate around the world, and we warned about these even all the way back to Japan in the late 80s, because these real estate bubbles build up when the baby boom generation is earning and spending and buying the most real estate, and governments are pushing low rates and all these things that happen, and banks tend to lower lending standards. But the big trigger tends to be when the generation starts to age and they get over their spending and house buying stage. And that's what triggered the Japan bubble bursting in 1991. And people used to say real estate can't go down. And I'm like, Tokyo is the largest city in the world, double the next largest city. They've got limited land for development, high demand, all this stuff. And their bubble burst, and it burst 60% and never bounced now 22 years later. So real estate bubbles can burst, especially when a generation like the baby boom peaks. Now, the next one was the United States, which we also peaked, said in our newsletter was peaking in late 2005, and then that burst. And then, of course, Ireland, and then Spain. So it's kind of like a popcorn popper. Stocks go up and down together to different degrees, but they go up and down at the same time generally. Real estate's popping at different places around the world with different demand and supply, regionally, and different baby boomers peaking at different times. Australia is the one country that doesn't have a demographic problem. You have almost sideways trends in demographic spending over the next several years, and then a larger echo boom, the next generation following the baby boom. Almost every other country either has a slightly smaller echo baby boom or no echo baby boom, and as much of Europe and East Asia and stuff. So in Australia, what I'm warning is that you are now outside of London and the UK, the most expensive real estate in the wealthy world after the US and California real estate bubbles burst. Also Canada, Vancouver. And real estate bubbles eventually kill themselves just from their own extremes. The California bubble and the US bubble peaked when California valuations in Los Angeles, San Diego, San Francisco were the same as Sydney and Melbourne today at 10 times income. There was no recession. There was no big spike in interest rates. There was no cause. It just got overvalued, and the demographic demand started to slow. So bubbles burst of their own extremes. But in Australia, when I was over there lecturing recently, I was warning, your problems are more external. You've got resource prices, commodity prices going down, and we've got a 30-year cycle on that. That's one of the most clock-like cycles we have, and that peaked in 2008 and a secondary peak in 2011, and resource prices are going to continue to go down off and on for the next decade. So that's going to hurt your best export industries and the financial institutions that finance them. But the biggest problem you got is the center of your whole region is China. And China has a bubble outside of anything I've ever seen. I not only study demographics, I study bubbles throughout history. And I'm saying China is the biggest, greatest bubble in history. It is government driven, which makes it more extreme and more dangerous. And real estate there is 30 times income in the largest cities on average, and even 15 times for just the average person and less expensive stuff. This bubble is going to burst. They have overbuilt their entire economy, condos, infrastructures, malls, offices, everything for the next 12 to 15 years at high migration rates from rural areas that aren't even sustainable. They're moving so fast, but they've overbuilt for 12 to 15 years. That bubble is going to burst. And when it bursts, all the rich Chinese that are running around buying real estate everywhere in English-speaking countries where they can get their kids in school or where they can leave China and get alternative citizenship, they're going to run out of money to buy and bid up real estate, just like the Japanese did in the late 80s. And that's the main thing keeping your major cities going is Chinese and foreign buying. Because again, every time I've come to Australia, and I've been there in 2011 and now again in 2014, almost everybody I deal with in places like Sydney in Melbourne, I mean, people who earn good, middle class or above middle class income cannot afford to buy a condo in the cities. When the people living there can't afford to buy, it's going to be good if real estate comes back down. It hurts the older people that have been sitting in it. But if the next generation can't buy real estate and if businesses have to pay unreal prices to their workers because real estate's high, then you wonder why, oh my gosh, you're losing your car industry. Surprise, surprise.
We've seen unprecedented counterfeiting of national currencies by central banks all around the world in an effort to curb deflation. What are some of the long-term consequences of this insane monetary policy going to be?
When you see debt bubbles, you see financial asset bubbles. And we've had the greatest debt bubble and the greatest financial asset bubbles, especially in real estate around the world ever, more than twice to what we saw in the Roaring '20s. When these bubbles finally fail and deleverage and crash, debt is destroyed. That destroys money. Financial assets fall 50, 60, 70, 80%. That's destroying wealth and money. And you have fewer dollars chasing the same goods. So we are in a deflationary environment. And just as you basically said in your question, governments are printing unprecedented amounts of money just to keep low inflation. They're not creating hyperinflation or even high inflation. Japan's been struggling just to keep deflation slightly below zero. Same with Europe. The United States has 1% to 2% inflation. So this money printing is not creating excess lending. We already did that. We already had too much debt and lending. It's only sustaining the bubbles and creating greater bubbles in financial assets. And bubbles only do one thing. They burst when they go to extremes, just like the real estate bubbles we're talking about in Australia. I don't care if it's supply. There's a lot of demand versus limited supply. That's exactly how you get a bubble. People don't understand bubbles. They die of their own extremes, as I said before. So these bubbles are going to burst, and I'm getting very clear signs. I look at stock markets first because stock markets are the leading indicators for the economy and other things like real estate that tend to follow. I'm seeing U.S. stocks coming into a pattern, a very clear pattern that I haven't seen in a long time. It says we're coming into a bubble peak in the next few months, somewhere between late March and early to mid-May. And then the Dow is going to peak at something like 17,000. And then over the next few years, we're going to see an even bigger fall to 5,000 to 6,000. The other bubbles were created by technologies and demographics, and they just got extreme like bubbles do, and it's human nature. This last bubble from 2009 through early 2014, totally artificial, as you said, from governments just printing money out of thin air, trying to offset deflation, offset a downturn, prevent the economy and free market systems from rebalancing themselves, just like your body would do if you ate bad sushi. And this is just going to totally fail, and then these people are going to lose credibility. So to me, this is the final bubble. And the difference is, we'll have a rebound at some point, maybe in 2016 or 17, but we will not go back to new highs next time. And Australia's market has not gone back to new highs in this rally because you correlate more with resource prices, and resource prices are 25% off their highs, and so is your stock market.
When do you think we're going to start to see a pullback in the markets?
I think it's going to start soon. I think you're going to see it start to get serious by this summer. It's probably going to start in spring sometime.
Hamilton Island was an excellent contrarian investment. What has you really excited going forward?
What excites me, if you're going to have a big crash, and everything's going to go down like 2008 and like in the early 30s, real estate, commodities, stocks around the world. When this happens, if you just preserve your gains from these bubbles now and sell real estate, sell commodities, sell stocks, in the coming months, you're going to be able to buy whatever you want, and you're going to need cash because nobody's going to lend you any money to do it. And Robert Oatley had sold Rosemount Winery. Before that, he knew about this island and wished he had done it. Somebody else had done it, but he got in trouble. And then he walked in and bought the thing for, I'm guessing, 10 cents on the dollar. That's the way you make extreme wealth.
Your new book has just launched. Could you share a little bit about it with my listeners?
It's called The Demographic Cliff. We're showing how this baby boom keeps peaking in different countries and regions around the world, and governments think this is a short-term financial crisis, and it is that, but it's much more than that. Demographic trends only get worse in more and more countries, and guess which is the next major countries to go off the cliff? Germany has a worse downturn than the Japanese did in the 90s, and even China is seeing its workforce start to slow for the first time, the first emerging country to see their workforce start to slow.
And for everybody in my audience who wishes to purchase it, where can they find it?
Well, we're in all the airport bookstores when I was there in February. Amazon is always great in price, but it should be actually easier to find in Australia than the U.S. because we got so much media while I was there.
Your daily newsletter is just jam-packed full of vital information. Where can my listeners go to subscribe to it?
That's really easy. You just go to www.harrydent.com, and all you have to do is put in your email address and you're on it. It's a daily one-page newsletter that just educates you in chunks about everything we think about everything, short-term and long-term, so you can get to know us better.
Ladies and gentlemen, you've been listening to Harry Dent, the senior editor of the free newsletter Survive and Prosper and the author of the newly released book, The Demographic Cliff. Harry, thank you so much for joining me today on the Contrarian Investor podcast.
Okay, thank you, Tom.
Thanks for listening, everyone. Be sure to check out my previous interviews with Rick Rule and Steve Keen. Also, stay tuned for the release of an extraordinary interview with one of the most knowledgeable natural resource investment executives in the entire industry, Jason Stevens. Enjoy your weekend, everyone.